Welcome to Business Morning right here on Channels Television. It's the first trading day of the last trading week. That's the last trading full week of August. Wow, August moved quite fast. I don't know if that's your experience too, but let's get to the top stories that set your agenda now, starting with oil prices. We're seeing oil prices rising after Ukraine stepped up attacks on Russia, fanning concerns. Russian oil supply could be disrupted, while expectations for a cut in U.S. interest rates have buoyed the outlook for global growth and fuel demand. Brent crude futures there, we see just a marginal gain. There's about 4 basis points, $67.77 a barrel. Still the range trade, at this point for Brent and WTI. We'll get an outlook for the week, what to expect. It was a good week for Brent and WTI last week. Brent was up over 2%. WTI up about 1.4%. That's for the whole trading week. And that's after about 3 weeks of losses. So starting this week in the green at this point, but it doesn't look that convincing, looking at Brent at this point. All right, let's get a check on other stories now. The Nigerian National Petroleum Company Limited and a group of upstream gas suppliers have entered into a long-term gas supply agreement with Nigeria LNG Limited as NLNG for the provision of 1.29 billion standard cubic feet per day of feed gas. The 20-year agreement signed in Abuja are expected to close Nigeria's prolonged supply gaps, boost domestic gas availability, and underpin the federal government's energy transition and economic reform agenda. Industry leaders hail the development as a game changer for energy security, industrialization, and the nation's role in the global gas market. And to other matters now, we see the Manufacturers Association of Nigeria. They're urging the federal government to ensure that the fencing materials for the ongoing Lagos Airport's perimeter fencing and security surveillance project are sourced locally. While commending recent infrastructure initiatives, MAN insists that importing such materials would undermine the Nigeria First policy and existing executive orders, stressing that the Nigerian firms have the capacity to deliver world-class products. The Federal Executive Council recently approved major innovation works at the Murtala Mohammed International Airport, Lagos, including perimeter fencing and security surveillance systems. So the association is saying, let's get everything we need from Nigeria to, boost the economy at this point. All right, to financial services, Premium Trust Bank, they've announced that they've surpassed the 200 billion naira capital requirement for the national commercial banks as stipulated by the Central Bank of Nigeria months before the official deadline. That's coming March 2026. This was accomplished through a highly successful rights issue and private placement exercise, further demonstrating the bank's ability to attract strong shareholder and investor support. According to the bank's management, this achievement is not only strengthens its financial resilience and competitive advantage, but also underscores its unwavering commitment to operational excellence and value creation. We're still expecting more banks to, hit that target at this point. But looking at investing now, the market crash, 2008, 2009, in the world and in Nigeria still remains fresh in the minds of most investors, with some expecting it might happen again, sometime. But according to Mr. Kofi Garba, Managing Director and Chief Executive Officer, APT Securities Limited, he doesn't see another 2008, 2009, style crash, happening again in Nigeria's market. As he says, the market has matured since then. He made a comment on capital markets over the weekend. Take a listen.
Diversification in the market, and we have more other market to play. You can go to NSE, you can go to FX market, and all these constitute to the market. So it gives the investors opportunity to diversify, and that's shedding the risk. Therefore, the likely crash we experienced in 2008 is not likely going to happen. And most of our stocks are trading within the fair value. For a market to crash, the PE ratio should be 20 and above. I'm telling you today, most of the stocks are trading in less than 10 PE ratio, so they are grossly undervalued. The very few ones that have a PE ratio of 20 and above, they are taking their correction, and within no time, they will get correction without people feeling, because most of the investors play the penny stock. If you look at the big stock, the telecom, the cement, they are all reading above 100 naira. And these, for you to even change the price, you need to trade 100,000 units. So in most cases, you need institutional investors to play that market, not retail investors. So the retail investors are playing less in the highly capitalized stock, and that will make less for bringing the market down.
All right, let's look at first conversation now. We see Nigeria's capital market and asset management industry is undergoing a period of transformation shaped by shifting economic policies, regulatory reforms, and rapid technological innovation. While recent recapitalization moves and policy interventions have spurred new fundraising activity, questions remain about how effectively companies can access both local and international pools of capital. At the same time, the rise of fintech and digital platforms that's reshaping how asset managers operate, creating opportunities for wider participation, but also exposing persistent gaps in investor confidence and financial literacy. Today, we'll take a closer look at the current landscape, examining how regulation, technology, and market sentiment are influencing capital raising, the growth of asset management, and the future of investor participation. Well, joining us to unpack this, we have Dr. Sonny Ayeri is the Group CEO, DLM Capital Group. Join me right here in the studio. It's great to have you, sir. Good morning.
Thank you, Lanny. How are you?
I'm fine.
Very good.
Yeah, it's a brand new week, and I guess a brand new week to raise money or make money.
Yes, yes.
You know,
yes,
at this
yes.
point, you know, depending on where you play. But you know, we've seen a lot, you know, happen in 2025, first half. We've seen the banks, you know, trying to raise capital.
Yep.
Seen some banks, you know, meet that, you know, capital target raise before the deadline, and some are still waiting.
Some are still working on it.
Working on
They're
it.
working on it.
At this
They're
point.
working on it. Yeah.
So, you know, talk to me about the landscape, you know, so far. How are you seeing everything play out?
Well, look, we're talking about the banking capitalization now. Right. I mean, look, I think it's been very positive for the banks. You've seen share prices of banks actually leapfrog. I just saw this morning now that Premium has reached the 200 billion mark, which is, you know, the minimum for a national bank. Zenith was, I think, the first to cross. And I think, you know, what I see is investors feeling confident. You know, the only competition right now, of course, is the insurance industry, which recently also came up with two things. They came up with new rules, which obviously strengthens the insurance industry. But more importantly, now the regulator has also increased the capital. So again, investors are looking at how to allocate capital also into the insurance industry, which generally speaking is always, you know, that long-term capital. So if you look at the insurance industry, say for instance in the States and in other climes, that's where you find the longest capital that exists. You know, so it's a very competitive landscape.
I'm talking about competition, and I'm just imagining that I'm an investor, you know, right now, and you know, the banks have come to me.
Yes, though.
To get money.
Yes,
I've given the banks money.
Yeah.
Maybe I don't have that much to give to the insurance guys.
Yes.
You know, at this
No,
point.
I mean it has to be. It's down to really capital allocation now, and taking, let me say, a longer term view. I mean, if I go back to me as many years ago when I used to be on the buy side, you know, what I would be looking at right now is taking a long-term view. How do I see the regulation or the laws impacting the insurance sector? One of the problems with insurance is really, well, we don't have an insurance industry, but it's really compliance, you know, and enforcement. Because for instance, if you create a law that says my car must be insured, how is it going to be enforced? Okay? If it's enforced, it's fantastic because it means there's a monthly cash collection that goes into insurance industry on a regular basis, and so on and so forth. Those are the kind of decisions I'll be looking at to ensure that, okay, well, how do I see the long-term industry for insurance vis-a-vis the banking industry? My 2 cents worth is that both industries will thrive. It's inevitable. All right? With the kind of population that we have, growth that we have, let me call it I would say the knowledge, you know, in terms of the youth, and where my prediction in terms of another 10, 20 years, the impact of AI and so on and so forth, it's inevitable that both industries will thrive.
Right.
So my view would be that as an asset manager, you should be looking to allocate some of your capital into the banking industry and some into the insurance.
Right. And how you seen the regulatory landscape so far?
For which industry?
Looking at the banking industry, the see what's playing out with insurance, at this point. How's all of that impacting how you do business?
Let me start with the banks. I think the central bank has done fantastically well since the new team has taken the helm. They've helped to stabilize the naira. Let's be honest. The economy has really sort of gone from this sort of choppy perspective to a more where you can say there's confidence going forward. Paying off there was a lot of debt when they came in. If you remember, the CBO owing FX, all the you remember all
the backlog,
it was kind of a complete mess.
Right.
And I think to bring in that team and actually stabilize the system, I think has been perfect. And I think the recapitalization was also as a matter of either you write off the bad loans you have, which of course would affect your capital, or you bring in fresh capital. It's one or the other. There was no in between. And I think the central bank decided to go for the additional capital buffers, which makes a lot of sense. So I think from a regulatory standpoint, they've done a great job. There are those who argue that the banking sector is overregulated, but in an environment like this, you need to really hold your bells and whistles, if you know what I mean. In terms of insurance, one thing I tend to notice, I've been working in Nigeria now this is my 20th year.
Wow.
Since 2005. And one thing I tend to see is that, once the central bank moves, other regulators move. I would not be surprised, for instance, if my primary regulator, the Securities and Exchange Commission, also came up with new capital requirements in due course. Yeah? It's just kind of like it's like
a domino effect.
Yeah, like domino effect, basically. And in a way, it also makes sense because, again, you want to keep track. You don't want banks way too capitalized than, say, for instance, investment banking space, right? Or banks way too capitalized than, say, insurance. There has to be some sort of balance. So as one moves up, it makes sense that the others also sort of like follow through. It makes a lot of sense,
right?
I think.
And talking about the space at this point, you did mention AI, at some point, and we're seeing the rise of the fintechs, the landscape, and they're changing the way a lot of things, happen. How financial services, how we consume those services. So talk to me about what you're seeing, so far, because I know where the money is flowing.
Well, I think. If I had to separate traditional banking from, say, digital banking, I think the main separator would be lending. So if you look at the digital banks, they tend to focus on consumer lending, all right, whilst the traditional banks tend to look at high-end lending, if that, right? So if we focus on digital. The impact of AI is beginning to manifest in, say, for instance, areas like customer service, where, rather than having, remember in those, if I went back 10 years, you'd have a warehouse looking thing with lots of people, phones, and,
right.
talking to customers. In the next 3 years, that's going to all disappear. You wouldn't even be sure whether you speak to a person or a robot, because it will be as interactive with you just like a person. Okay.
Maybe with some emotions.
Even with that, yes, because basically, I've seen some tests and I've heard some tests, and it's amazing what's going on there in terms of incorporating AI into let me call it customer interaction. Then you also have, I would say, the impact of that area. Digital banks, that is focusing mainly, like I said, consumer lending and also SME lending, and which is part of the reason why we also looked at, and we'll talk about that probably later, the composite bonds as a way of actually providing financing to that sector, because we feel that one of the most important areas in developing the Nigerian economy is obviously supporting and investing both the SME sector, which is like supporting the supply side. So the SME is the supply side. But if you're giving funds to a business to grow its business, the way that it becomes successful is how? There has to be people buying, right? And that means that you've also need to fund the demand area, which is the consumer, all right? The consumer needs to basically be able to leverage their incomes, raise monies, borrow monies to either buy the cars or buy the this or buy whatever. So that becomes the balance and the equilibrium between the supply and demand side of things. And AI would certainly, inevitably, play a major, major role in the transformation of that market going forward, because starting at consumer interaction today, that would move to all other things, machine learning. I mean, that's already been there, so how you pay, what you pay, how much you earn, how you move your monies, etc. That's all been recorded. That's all data analysis, where you're putting all that information together to take a decision. So right now, if you look at the nano loan space, what I mean by nano loan space is loans of, say, 5,000 to 100K, for instance. A lot of the decisions as to whether you get the loan or you don't get the loan is not human. No, that is all completely artificial intelligence, machine learning. Yeah, because the time for a person to go through that credit analysis to lend 10K.
AI will know that you didn't pay back 10K.
Absolutely. It knows that you didn't pay that 10K. It knows that basically you have either a loan or whatever outstanding with another bank, with another credit bureau, right? It knows how much you earn. Okay, right. It's all about information, and then basically putting all that information together to take a decision. So it is inevitable that a lot of these
AI will not say, "Oh, because you're going through some problems right now.
Oh, no.
Maybe you should still get that loan." No, it's going with fact.
No, it will go with fact and decide whether you do or you don't.
Right.
But I will give you an example where AI can actually have emotions. Where, for instance, it's saying to you, Mr. Williams, you're owing XYZ. And you say, well, look, things are difficult for me right now. I'm in between jobs, etc. It says, okay, you know what? Let's hold off. Let's give you some time to get a job. All right? We'll come back to you, say, maybe in 3 months' time and see whether things are better. Or I can get somebody to actually speak to you and let's work out something that might make sense. Yeah.
That's nice.
Yeah, so it's not just, so it's not cut and dry, like, no emotion, no whatever. And the thing is, this is just the beginning. I mean, to me, it's actually scary.
I know.
Where AI will go in future. Because it would actually get to, I was listening to an ex-Google guy this morning talking about how he expects that the capacity of AI would probably, right now, humans are the ones inputting information. Now you're going to get to a point where AI is the one actually putting the information in to improve itself. By that time, you're getting smarter than even the human.
I just pictured AI just saying, I am inevitable.
Yeah. We don't want to Terminator.
No, we don't want Terminator.
Exactly.
Okay, so, at this point, let's look at some of, the projects. I know you're working on, some projects at this point, and it's an interesting type of bond.
Yeah.
It's like the best of two worlds.
Correct.
Because it's hard to hear safe and high return.
Yes. In the same. Correct.
If it's safe, it should be low return.
Yes. Yeah.
So talk to me about that.
Yeah. So that we christened it sovereign composites, sovereign composite notes, and the whole idea is the word composite means to put two things together. So the whole idea is to bring in FGN bond cash flows, okay, and then also mix it with real sector cash flows. So when you put both cash flows together, you can see one of the reasons why you have a higher return. That's number one. Number two is that it is designed in such a way that your principal, which is the money you part with, and the interest you are expected to earn, okay, is 100% backed by FGN cash flows. What that means basically is that whether real sector monies come or they don't come, you as an investor are guaranteed to get your principal and your interest back from FGN. Okay?
And does that take most of the chunk of the investment, the fund?
Yeah,
That's
so the money that is actually
bond.
invested, right? The way it's designed, the monies that are invested, the entire monies are actually invested in government bonds. Okay? But the repayment required to ensure that you, the investor, is repaid, because it's an amortizing bond. What I mean by amortizing is I'm paying back principal and interest. Okay? If it's a bullet, it means I'm only paying interest and I will pay you the principal at maturity, at the end. So because I'm paying you that principal and interest, it means that obviously the amount of interest I will pay to you will be less. Think about it. If I borrow 100 naira from you at 10% to pay you 100 naira at the end, maybe I'll just pay 10, 10, 10, 10,
Right.
with 10% of 100, right? All the way down, right? And then pay you 100 at the end of the transaction. If I paid it on an amortizing basis, let's say I was paying it and I was paying you 10 naira every year. So the first year I will pay you 10 naira, right? 10% of 100.
Right.
The next year I will pay you 9 naira, 10% of 90, right? Because I'm paying you back 10 naira of your principal.
Right.
The following year I'll pay you 8 naira, right? And then 7 naira, 6 naira, because obviously I'm paying down your principal by 10 naira every year, right? So you can see now already that the interest I'm paying is reducing. As opposed to paying 10, 10, 10, 10, 10. So you can already see the arbitrage between a bullet and an amortizing.
Right.
So that's exactly what we do. So from that perspective, because I'm paying you, because it's an amortizing bond, it means that what I need to pay you, right, is out of the entire bonds I bought, I only need 66, 2/3. In other words, 2/3 of the bonds, okay, and all the interest income on it. I assign and use that to pay you. That means I have a balance. All right? Now that balance, if it was say 30, which is what we're doing right now, that balance would be 10 billion. So in other words, 20 billion of the amount that I've raised is for you. The interest component on all 30 is for you, but I still have 10 billion. What do banks ask for when you want to borrow money from a bank?
Collateral.
Thank you. So I've got 10 billion of collateral. And the best collateral available in the country, which is what? FGN bonds. So if I place that with a bank, it can now give me real cash that I can now use to do what? Fund the real sector.
All of the fund goes to the FGN bonds.
Correct.
So there's no risk.
No, zero.
I like no risk.
Yeah. No. So
And it gives good return.
My dear brother, when we were putting this together, yeah, you know, it actually sparked from a thought of how can we come up with a product that gives investors, whether it's asset managers, pension fund managers, you know, DFIs, etc., a transaction that actually they know they would get their full money back, right? But at the same time, can also give them a good yield. Now, where does that yield come from? It's very simple. What we did was, instead of, like I said to you, we've talked about a bullet and amortizing, right? But now we're amortizing the bond. Okay, normally, just like I said before, if I'm owing you 100, I pay you 10 naira. I'm now owing you 90. So normally, my 10% would be based on 10% of 90. If I pay another 10, it should be 10% of 80, and so on and so forth. Now imagine I'm actually paying you 10 naira every year, but I continue to pay you 10 naira. Can you see that your return, now it gets to a point where I'm paying you 10 naira interest over 10 naira principal. Is that not 100% return?
That's 100%.
Thank you.
Wow.
You see? So what we designed, because we now have two sources of cash flows, we're now in a position to actually give you that kind of return, whereby instead of paying you 10, 9, 8, 7, we actually pay you 10 all the way down, but you're actually reducing the principal balance. Therefore, that's how you get that upward return curve.
Fantastic.
Exactly.
And that's what investors love.
That's it. So
they wanted to go up.
Well, that's what we had hoped that investors would love, because the whole idea was that to give you a return that actually gives you at least 2 to 2.5 times what the federal government is paying you, hold to maturity. And people like pension funds should have been absolutely, you should love this, because for the first time, something is telling you that my 10-year return not only gives me a high return of investment, but the biggest threat to pension funds has always been what? Not even just pension fund, bond fund managers. Inflation. All right? So you buy a fixed income security, let's say it's 15% per annum. Inflation goes to 20, you're under the water. Now imagine having a bond that, as inflation goes up, is actually going higher than inflation. In other words, helping you to hedge the risk of inflation. So we've done something that we believe, from the investor side, gives you very little risk. I mean, the bond we're doing, and it's, like we said, we're not doing it as a transaction. It's actually a product. We've given it to the market. We'd like to see it mushroom as a new product, where investors are able to now, improve the credit quality of their portfolio. So, for instance, if you look at a normal corporate portfolio,
right,
you might have triple B, single A, etc. Now imagine, I had this portfolio, 50% of them are in sovereign composite, which are triple A, and 50% in normal corporate bonds, A, triple B, etc.
Right.
On a weighted average basis, what have you done? You've significantly improved the credit quality, because now you have 50% of your corporate bond portfolios in triple A. That's number one. Number two is that you now have 50% of your portfolio giving you at least 2 to 2.5 times the return of FGN.
Fantastic. Well, there's so much to unpack at this point, and I know this conversation will definitely, keep going. But thank you so much for helping us unpack this. Dr. Sonny Ayere is a Group CEO, DLM Capital Group. Thank you so much for giving me imaginary money at some point, because I kept hearing, "Laddie, take 10 now, Laddie, take 100." Well, thank you so much,
No problem.
for coming on today.
Thank you.
All right, sir. Thank you so much.
Thank you.
All right. When we come back, we pivot to Nigeria's digital assets industry. 1 year of regulation that's regulating cryptos. How far is the industry fair? That's next. Do stay with us. Well, just a few years ago, Nigeria's crypto ecosystem was defined by uncertainty. From 2021 through 2023, the industry struggled with unclear rules, policy pushback, and that's about how businesses could legally operate. That picture began to shift with the passage of the Investment and Securities Act, ISA 2025, which for the first time created a framework for regulating digital assets. Well, today we'll be reflecting on how Nigeria has moved from an informal crypto market to a regulated ecosystem, what licensing is meant for businesses and investors, and where the next phase of innovation and growth might come from. Well, joining us to discuss this now, we have Olaoluwa Samuel B. He's a co-founder, Busha. Join me to discuss all of this. Great to have you on the show.
Thanks for having me again, Laddie.
Yeah, so quite the move, We've seen, with a snapshot, of Nigeria's digital industry. We see Nigeria ranks second globally in P2P Bitcoin trading volume. That was in 2024. Over 40 trillion worth of crypto transactions reportedly passed through Nigerian platforms in the last year. And now we know Bitcoin is a security in Nigeria. And I'm trying to imagine, cast my mind back to 2016, 2017, 2018, where it was seen as a wild, wild west. At this point, anybody could just come up and, start up a crypto platform, and you don't even know who's behind, that platform. But things have changed. Talk to me about what you've seen so far. You've been licensed. How's it been? After a year.
Indeed, yeah, it's been a wild ride. It's coming from a past where the industry has been a pariah to the system, as you described, and the regulators at the time, or historically, had always had a head in the sand approach towards the industry. As you described, it's a very big space, lots of youth participation, so it's one that needed some sort of action. The historical action had been one of prohibition, one of heavy clamping down on the stakeholders in the space. But now, with the new administration, there was a complete U-turn around the posture towards crypto. And it's very hard to comprehend the radical change that has happened over the past year. But there's a lot of recency bias around how long it's been. But it's only been a year, and we've even preempted lots of the other major markets across the world around how we took a proactive approach towards sort of regulatory innovation that we've seen so far. So it's been a year, and that year has been an interesting year for us, to say the least, as Busha. We've been working with the regulator, the primary regulator in this case being the SEC, and a lot of the effort has been around just regaining the trust that has been eroded over several years. It's very hard to get back on the table with the government. There's a lot of skepticism on both sides around the direction going forward. And
because it's funny, to some minds, at this point, when they hear crypto, they're afraid at first. or it used to be that way, a couple of years ago. But I'm sure there are still people that are still quite like, I don't understand it.
There is a lot. There is a lot.
There's still many.
Indeed, and it's importantly there's a lot even within the system on the public sector side that there's a lot of action that needed to be taken to wean them off that perception. And so a lot of the work that the regulator has done and focused on for the first year has been around that education aspect of things, both building the capacity internally within the SEC. So now they have an entire department focused on the sector. We have very real-time collaboration, reporting, and just learning from each other. And the philosophy of the space has always been one of competing with the system, rebellious, but now we're trying to find a balancing act around how to satisfy them from their consumer protection and investor protection perspective, and also satisfy us from our business growth, user adoption, economic freedom perspective. And that's a very delicate balancing act. So this year I've been really focused on that. You see the SEC participating in industry events more actively.
What's it like working with the Securities and Exchange Commission here?
It is a very tough, I would say a very sacrificial effort on both sides, really. From us, it's a very heavy cost to compliance. A lot of people really want to get in the compliance fold, but it's been one you can't really move fast and break things anymore as a startup or as a fintech business. You have to build everything based on compliance rigor, consumer protection first perspective. And that has meant that we really had to bolster our compliance infrastructure, run everything by them, report everything proactively.
I'm talking about reporting everything, proactively. Yeah. I'm trying to imagine how, a cryptocurrency or digital asset exchange, works. You might get a listing, a crypto platform would, approach you and say,
University of Cambridge arm to launch into the market an executive certificate program for the space that's going to teach people in the industry, in the public sector, but also in the private sector about the basics of the industry, how it's looking like globally and how it's going to evolve in the African context. But all of those things are happening right now and very actively as well.
Wow, quite interesting, with Cambridge at this point, because we need all the education.
Absolutely.
At this time, so everybody can actually understand
exactly what's going on, yeah.
How, because cryptocurrency can be quite daunting. Just trying to transfer, funds. You get a string of letters, numbers, mixtures of different things that form an address that's unique to you. So the education, it seems like it's almost like you're learning coding.
Yeah, our approach has really been to simplify all of those blockchain-heavy elements of the space and just obscure a lot of those complexities and just offer a very simple interface for users. And that is also what the regulators are concerned about, ensuring that people who are interacting with the space are not confused. And this is usually the angle that a lot of the dark
because
elements
confusion could lead to loss.
Absolutely.
You could end up sending a lot of money to a wrong address.
Yes. So in fact, part of the design of the regulations is around our systems. How do we communicate these things that we do? We design them to minimize the potential for those types of losses. So all of those things are things that we've really evolved over the past year and trying to ensure that our system is as simple as you'd find in the legacy systems of the banking sector and all the other fintechs that you see in the market. So it's the early days, but we think that the future is definitely bright for the industry.
And talking about early days, definitely some industries come up and they attract a lot of investment. We've seen foreign direct investment in Nigeria. That's not living up to expectations, even though FPI doing well, but that's hot money, according to experts. So do you think the cryptocurrency industry in Nigeria it has that potential to attract FDI?
Yeah, it's returning actually. There's a trajectory of growth before we had the whole banking ban that really spooked a lot of external investors. But now we're starting to see a return of those types of long-term FDI type investors because of the legitimacy that this licensing regime has brought back into the space. They're still sort of a bit cautious around interacting with Nigeria. There's still some sort of coherence that needs to happen within the system as well. Some agencies are still here and there, while others are stronger on the industry than the others. But over time, we're starting to see them gain more confidence about the market and enter the space again. You can see from the numbers you quoted as well. Lots of retail participation is still very active. What we're seeing now is a lot of institutional participation, where the large corporates and SMEs that have been in the shadows before and didn't have confidence around interacting with the space are now beginning to consider digital assets as part of their entire portfolio strategy, interacting with licensed players to be able to hold a certain percentage of their assets in digital assets as well, and figuring out what their strategy is around offering this to their own customers as well. So now we are beginning to partner with other regulated players around designing products that might appeal to institutional segments and global segments as well. So this is are the positives of the regulations.
And talking about monies coming into investment coming into Nigeria, we're also hoping those investments stay.
Yep.
Because most of the time when you hear a fintech raises this and that amount of cash, at some point there will be an exit, and that money would leave Nigeria out. And using foreign cryptocurrency exchanges at this point, that's like importing, because that money is going out at this point. Even though the trader is making money, those fees are going outside Nigeria and creating jobs outside the country. Talk to me about creating investment here in Nigeria for this crypto industry, especially for cryptocurrency exchanges, and that money staying in Nigeria.
Yeah, a big risk vector, even beyond the capital exports window there, is the fact that the foreign exchanges pretty much can do anything they like outside of the regulations. So a lot of regulatory efforts and enforcement that's going to happen is around ensuring some localized content around bootstrapping local activity, ensuring that the offices and the principals are local, and that can ensure that some tax revenue also stays in the country as well. And they can adhere to pretty much the safety and prudential rules that the regulations are imposing. So the foreign players are still in the market. They're still sort of, doing whatever they feel like doing. But I think over time that is going to start to change as well, where the regulators are going to begin to clamp down on value moving out of the country and ensuring that value stays within. When the capital comes in, we're going to hire more people locally, invest in local talent when it comes to blockchain-specific talent. And the way the banking sector evolved from 2 decades ago, where we now have a very robust banking system, is the way this would also evolve going forward. But also all of those things require lots of localization of capital, of talent, of regulations, and all of those things as well. But I think that's happening. But yeah, you're going to see a lot of enforcement and a lot of regulatory rules reaching specifically to ensure localization coming on stream as well. We're seeing some of that happening already.
Do you think the foreign cryptocurrency exchanges and the local ones should have the same rules or somewhat differentiated?
Similar to how you have it in the banking sector or even the asset management sector, there needs to be some sort of unification of rules. The foreign guys need to really adhere to the rules, same rules that the local players are adhering to as well. And the local players are adhering to very rigorous rules, many of which most of the foreign players would not be happy to fall under. So as long as the rules are rigorous enough for the local players, there's a level playing field for any foreign player to also work in, as long as they're happy to adhere to those same rules as well. So there will be no preferential treatment for both parties. I don't think there's any need for any regulatory preferential treatment here. As long as they offer better service, you have more rigor, and you're able to build the trust from the user base. I think you compete effectively against the foreign players as well, and that's what we're trying to do.
But do you think the foreign exchanges are keen on getting a license in Nigeria?
A few of them are. Many of the models that some of them have just do not satisfy the requirements. A lot of P2P trading that's happening that's really outside of the acceptance framework of the local regulators. So many of them just honing in on that P2P segment. There's really limited rules around things like derivatives so far, or things like staking, and many of these things that these foreign guys are strong at. So most of them would not be keen to fall into the local rules yet. But those rules themselves will evolve to be able to accommodate some of these players, as long as they do not compromise the integrity of the system as a whole, because we always have to balance what they care about and what the industry appetite, is gearing towards.
Right, and looking at that P2P market, it's one that you have to keep an eye on, most of the time. And I've noticed that when transactions go on in that space, there's always that instruction: don't write anything about crypto when you're transferring money. So there's still that fear, of Nigerian banks.
There is. The P2P market in general, just as you find in the FX space, it's a black market. It's one where trading is happening from the person to person, and that's what P2P means. The authorities generally do not favor the P2P space because it's outside of their purview, and they cannot really institute protections for the consumers or for the investors. Usually they prefer the counterparty to be an institution that is regulated, and therefore they can offer the certain protections and write rules around how you interact and pretty much coordinate the market. The P2P market is one that cannot be coordinated because it's inherently decentralized and it's person to person. So you don't really know the counterparty on the other side. You don't know the quality of the asset they're transferring to you. You don't know the source of the funds they're moving to you as well. So you might find yourself just receiving money that comes from a sanctioned jurisdiction or from an illicit actor, and you don't know that as a recipient. You hit your bank account, your account gets blocked. That's why those instructions are there. But when you're working with a regulated player, you're confident that they have bank accounts that are whitelisted by the authorities. The funds you're receiving is clean, and you don't have to worry about all of those counterparty risks that are inherent in the P2P market. So the regulators focus on really regulating the centralized players that they can coordinate and write rules for, while trying to clamp down on the black market that is the peer-to-peer space,
right,
which is what is leading with the foreign.
And before the black market space, as the P2P space, you could transact, openly. You could get cryptocurrency exchanges to directly credit, a customer's account. But that changed,
Yes.
After all the bans and all of that. So why aren't we at that phase again?
So now today, at Busha, we can credit you directly to your bank account because we also now, able to interact formally with the banking system. But it takes a while for the trust of the users to return to the centralized platforms that can credit you directly. And many of them do not even know that they are now licensed players that you can work with safely. Many of them still operate with these foreign platforms and these P2P venues because they don't even know that that these rules have been lifted, or there's a place where they can operate cleanly without fears. So a lot of this education still needs to happen, that we need to, even as push out there and really try to inform the users of the changes in the system. But it's going to happen over time where, as we advertise better, as we do more events, as we do more education, people trust the system better, and they understand that they can transact with a player that is,
And we're definitely watching out, to hear from, the bank regulator.
Yes.
At this point on what to expect. But we'll just a quick one for our DSTV viewers. We're going to join the live coverage now. African Chiefs of Defense Staff Summit 2025. That's starting now on DSTV, but we're live on other platforms. You can still continue following the money right here. But it's been great having this conversation with you. But before I let you go, what are you seeing? It's been about 1 year, of regulation so far for the crypto industry. What are you seeing years later?
I think you're going to see a more mature industry. You're going to see a system that is more accepting of the stakeholders in the space, and a lot of growth over the short term and also in the medium term as well, where more ordinary participants are going to enter the space, more corporates are going to enter the space, and that's going to come from just a broader trust base that we're currently cultivating with the regulators. But I'm very excited about the future of the company, about the future of the country, as we're really leading across many vectors. So hopefully, the more you see me, the fatter I become, and hopefully the whole space is
right.
exciting.
And definitely, I know the traders will also want to know what's ahead, for them. Do they see more gains? Are the gains gone in the crypto market?
No, I think we'll see a lot more stability and less volatility as the space broadens. So I think that's more important than just if you see more gains.
10x, 100x, is that over?
It's still there. If you can, of course you have to do your own research, ensure that you're buying the right things, but also working with the regulated platforms to ensure that your losses are somewhat mitigated and protected against. Because we can list things that are just random and high risk or extremely risky. So by working with us, you at least have some basic level of protections and downside risk, downside protections. But really, I think that the industry is still young as a whole, and there's still a lot of upside to it. So yeah, it's still a good portfolio piece for you, definitely.
And I know Kanye West released a meme coin.
I saw that
recently. Didn't do too well.
Didn't do well. Yeah.
How are you seeing all those meme coins?
They have their own category of things. It's not really the most exciting thing for the regulators or for regulated players, but it's a heavily demanded sub niche of the space. So yeah, if you can buy into the meme story, and a lot of these guys buy it for other reasons beyond even the gains. But yeah, it's a purely speculative market. It's a fun market as well. So yeah,
can be fun.
Hopefully, you're having fun as
when you're making money.
You're also losing money,
but not much fun.
Yeah,
when you're holding a bag.
Yeah, it's a very hard industry to really gauge on fundamentals, but yeah, that space is also evolving, and we'll see where memes go going forward.
Wow, memes, quite incredible. Things just keep happening, in this space. Well, thank you so much. Thank you for helping us, unpack this. I'm sure at some point maybe we'll have an exchange that's just run by artificial intelligence.
It's very possible, yes.
Just on its own, self-aware. We'll keep watching. Thank you so much. Laoluwa Samuel B is a co-founder of Busha. Thank you for coming on today.
Cheers.
All right, we'll take a break now. When we come back, we'll find out what's happening in the global space and what to expect this week. That's in a moment. Just stay with us. All right, let's get a check on the global space now. What to expect this week and what's happening today. Let's look at what to watch in the global economy. Market moving data that could come out. Yeah, so they have it. Key earnings. We're looking forward to Nvidia's earnings as the chip maker has been in the front and center on the AI boom with surging sales on growing demand for the emerging tech. Investors will likely be watching for updates on its most advanced offerings as well as its plans to navigate changing policies. When the company posts its quarterly results, some other companies are set to also report this week in the US, including chip maker Marvel Technology, Dell, CrowdStrike, cloud provider Snowflake, and engineering software maker Autodesk, along with several Canadian banks. And we're also looking out for Fed speaks there. Federal Reserve official, that's Richmond. As for Richmond, President Tom Barkin, he'll be speaking some point this week, I think about Wednesday and Tuesday, and investors will be looking out for what he has to say about inflation in the U.S. Going forward. Then we'll also look forward to the Federal Reserve's preferred inflation data at this point. We're looking out for the personal consumption expenditure and initial jobless claims. So definitely this kind of data, that will definitely move the market. So other stories now, China's smartphone shipments, that fell for a second straight month in June as high inventories and weak sales, that weighed on demand. According to Jefferies analysts, shipments dropped 14% year on year, following a 21% fall in May, dragged by a roughly 31% decline in iPhone volumes and an 11% drop in local brands, and that's according to analysts there. Now, Chinese technology stocks, especially chip makers, they rose sharply today as Beijing's scrutiny of Nvidia chips that sparked increasing bets on locally sourced processors for artificial intelligence development. Chip stocks in China were also encouraged by a major AI developer, DeepSeek, unveiling a model optimized for Chinese-made chips there. Then move over to Europe now. See, German business morale, that improved unexpectedly in August to its highest level in 15 months, and that's according to a survey today. The IFO Institute said its business climate index increased to 89 points in August from 88.6 in July. That's the highest since May of last year, while analysts polled by Reuters had forecast a reading of about 88.6%. Then today we see Bitcoin that fell below the $113,000 level, raising sharp gains sparked by dovish remarks from Federal Reserve Chair Jerome Powell. That was on Friday last week, while the second largest cryptocurrency, Ethereum, that traded near record highs today. We're seeing inverse movement there between Bitcoin and Ethereum. Bitcoin, that traded about 2.1% lower earlier, about $112,550. Token retreated to over a 6-week low, near about $111,000 in the previous session, as traders booked profits after the jump, seen on Friday. Yes, the comments from Fed Chair Jerome Powell, it was seen as quite dovish right there when talking about interest rates, going forward in the U.S. and investors reacted to that. It was green on the screen in most of the risk assets that we track at this point. So let's see if that sentiment continues into this week. But we're seeing Bitcoin not following that sentiment there. But Ethereum, the altcoins, those are not looking so bad at this point. So we'll be looking forward to Nvidia earnings this week. Definitely that will give direction on what's going to happen with the tech stocks. That's on the US, that's the tech-heavy NASDAQ. So we'll give you more updates. That's at 1:30 p.m. on Business Incorporated on what's playing out with those markets that we track right here. But thank you so much for watching. Ladi Williams from me and the team right here at Channels HQ is bye for now. Go out there and make some money. Bye-bye.